Michael Saylor, the CEO of MicroStrategy, has a bold vision for the future of finance. He's pushing for companies and governments to adopt a Bitcoin standard.
Saylor argues that in the current economic conditions, holding on to traditional assets like treasury bills is actually a losing game. He says their returns are so low, they're basically being eaten alive by inflation.
He brings up Microsoft as a prime example of a company whose value hinges more on predicted future earnings than tangible assets.
So what does Saylor propose? He suggests that companies should ditch their cash reserves and go all in on Bitcoin.
He's so convinced of this strategy that he's publicly challenged anyone managing a cool $100 billion to a sit-down to discuss adopting a Bitcoin standard.
And it's not just corporations. Saylor thinks the U.S. government should be building up a strategic Bitcoin reserve, much like they do with gold.
He believes having a big chunk of the Bitcoin network under U.S. control would be a huge strategic advantage in the global arena.
Now, Bitcoin is known for its volatility, so Saylor's company, MicroStrategy, aims to bridge the gap for investors with different risk tolerances. They're creating a variety of Bitcoin investment products to manage exposure.
It's interesting that while Saylor is enthusiastic about the potential of various digital assets, he's a firm believer that Bitcoin is the only one that's a safe bet for the long haul.
Starting in 2025, he believes accounting for Bitcoin at fair value will completely change how corporate balance sheets look. This shift would allow companies to, if they wanted, hold 100% of their liquid assets in Bitcoin.
He even suggests that big-time investors like Warren Buffett would be smart to consider adding Bitcoin to their portfolios, given the potential returns.
Saylor argues that a lot of folks, even those in high finance, haven't truly grasped what Bitcoin represents and how significantly it could change things.
He advocates for the U.S. government to acquire a sizable chunk of the Bitcoin network, maybe 20–30%, drawing parallels with how nations historically secured control over valuable resources.
He makes a comparison between controlling a resource like oil in the 20th century and having control of the Bitcoin network in the 21st. Owning a large portion could potentially allow the U.S. to control the flow of capital in the future.
Saylor thinks this move would pull foreign capital into the U.S., minimizing the risk of other countries ditching U.S. Treasury bonds in favor of Bitcoin as a reserve asset.
He suggests that the U.S. could even finance this Bitcoin acquisition by selling off its existing gold reserves, essentially swapping a 20th century asset for a 21st century one.
Saylor criticizes SEC regulations that cap operating companies from holding more than 40% of their liquid assets and securities, forcing them to rely on what he calls toxic capital treasury bills with their measly returns.
He speculates that if there had been a red wave victory in the last election, the environment for Bitcoin and the digital asset industry would be a lot friendlier. He believes, though, that even in the current climate, things are still inching towards wider acceptance of Bitcoin.
He's convinced that a pro-Bitcoin administration would lead to a surge in Bitcoin's price and a growth spurt in the digital asset ecosystem.
He even goes so far as to predict that Bitcoin could hit $300,000 to $400,000 by 2028, basing this on his Bitcoin 24 model that projects an annual growth rate of 50% to 45%.
Saylor emphasizes his long-term commitment to Bitcoin, focusing on the potential down the road, rather than getting caught up in the day-to-day price swings.
He points out that investors are drawn to MicroStrategy because of its diverse range of Bitcoin products, which appeal to a wide spectrum of risk appetites.
Saylor likens MicroStrategy's role in the Bitcoin market to an oil refinery, refining the inherent volatility of Bitcoin into products tailored to different investor needs.
He explains that MicroStrategy caters to everyone from investors seeking high-leverage exposure to those looking for low-risk, low-volatility Bitcoin investments.
Saylor is critical of the current regulatory environment in the U.S., arguing that it's stifling the growth of the digital asset industry. He feels these regulations are too restrictive and are preventing companies from accessing capital markets.
He predicts that a shift to a pro-crypto administration would usher in a much more favorable regulatory framework for digital assets, potentially leading to a boom in innovation and propelling the total market cap from trillions to hundreds of trillions of dollars.
Even while advocating for the growth of the digital asset industry as a whole, Saylor holds firm to his belief that Bitcoin is the only digital asset truly suitable for the long haul.
He distinguishes Bitcoin from other digital assets like securities and tokens, emphasizing that it's unique because it doesn't carry counterparty risk thanks to its decentralized nature and limited supply.
He acknowledges the importance of stablecoins in the digital asset ecosystem, but also points to the regulatory hurdles they face, particularly in the U.S.
He believes a clear regulatory regulatory framework for stablecoins would unleash massive growth in the industry, potentially reaching a market cap of trillions of dollars. This, in turn, would increase demand for U.S. sovereign debt and strengthen the U.S. dollar globally.
Saylor believes that stablecoins backed by the U.S. dollar could play a significant role in spreading American values and promoting financial inclusion worldwide.
He envisions a future where digital assets, facilitated by stablecoins, become widely accessible, offering financial services to people who are currently shut out of traditional systems.
While recognizing the broader potential of digital assets, Saylor cautions investors to be careful and do their due diligence before investing in anything other than Bitcoin.
He believes that regulatory clarity from a pro-Bitcoin administration would instill confidence in institutional investors, further fueling adoption and growth.
He acknowledges that there will be hurdles in the shift to a Bitcoin standard. Existing financial institutions may resist change, and there will be regulatory obstacles to overcome.
Despite these potential bumps in the road, Saylor is optimistic about Bitcoin's future and its potential to create a more equitable and prosperous financial system.
He suggests that the traditional financial system is stuck with outdated infrastructure and practices that no longer serve the best interests of individuals or businesses. Bitcoin, in his view, offers a superior alternative that enables faster, cheaper, and more transparent transactions.
He stresses the importance of individual sovereignty and champions financial systems that empower individuals, not institutions.
Saylor sees Bitcoin as a tool for financial inclusion, potentially opening up access to financial services for billions of people who are currently unbanked.
His vision for a Bitcoin-powered future is ambitious and challenges the existing financial order. His arguments encourage us to critically assess the limitations of the current financial system.
While his perspective is undoubtedly shaped by his substantial investment in Bitcoin, he brings valuable insights to the table about how this technology could disrupt traditional financial systems and empower individuals.
His insights offer a glimpse into a potential future where Bitcoin plays a central role in the global financial system. Whether this vision becomes a reality remains to be seen. However, his arguments raise crucial questions about the future of money and finance that deserve careful consideration.
His ideas challenge conventional notions of value, investment, and economic power. His enthusiasm for Bitcoin is undeniable, and his arguments are compelling. He challenges us to confront the limitations of the current financial system and consider the possibilities of a more decentralized and equitable future.
Whether Saylor's vision comes to fruition or not, he has undoubtedly sparked a conversation about the future of finance that is likely to continue for years to come.
His insights shouldn't be ignored. He's a successful entrepreneur and investor with a deep understanding of both technology and finance.
His perspective provides valuable insights into the potential of Bitcoin to disrupt traditional financial systems and empower individuals. Regardless of whether you agree with his conclusions, his arguments raise important questions that warrant careful consideration.
The world of finance is undergoing a rapid transformation, and Bitcoin is at the forefront of this change. Saylor's insights encourage us to engage with these shifts and explore how emerging technologies might shape a better financial future.
The future of Bitcoin may be uncertain, but Saylor's vision reminds us that the financial landscape is not static. It's constantly evolving. Those who are willing to embrace change and challenge conventional wisdom may be best positioned to seize the opportunities that lie ahead.
Saylor believes a fundamental shift is happening in the global monetary system. He sees the current system, which relies on fiat currencies and centralized institutions, as inherently flawed and unsustainable.
He sees Bitcoin as a superior alternative, a decentralized and mathematically sound monetary system equipped to handle the challenges of the 21st century.
He anticipates that the road to Bitcoin adoption will be bumpy, with resistance from those who benefit from the current system and unforeseen challenges.
Despite these potential obstacles, Saylor maintains that the long-term trend favors Bitcoin. He believes that its inherent advantages will ultimately prevail, leading to a future where Bitcoin is a central player in the global financial system.
Saylor acknowledges the volatility of Bitcoin's price, recognizing its tendency to fluctuate significantly. However, he argues that this volatility is a natural characteristic of an emerging asset class, still in its early stages of adoption.
As Bitcoin matures and gains wider acceptance, he predicts that its price will stabilize and its long-term value will become more evident. He encourages investors to look beyond the short-term price fluctuations and focus on Bitcoin's long-term potential. He suggests that those with the patience and conviction to hold on to Bitcoin for the long haul will ultimately be rewarded.
Saylor argues that Bitcoin represents a paradigm shift in how we think about money and value. He challenges the traditional notion that money must be issued and controlled by central authorities. Bitcoin's decentralized nature and finite supply, he argues, make it a unique asset, immune to the inflationary pressures that plague fiat currencies.
He points to its inherent scarcity and resilience to censorship as reasons why it's an ideal store of value for the digital age. He envisions a future where Bitcoin ascends to become the global reserve reserve currency, displacing the US dollar and other fiat currencies.
His vision is both audacious and ambitious, but it's grounded in his deep understanding of technology, finance, and the history of money. His insights encourage us to re-examine our assumptions about the nature of money and its role in our lives. He urges us to embrace the potential of Bitcoin to create a more equitable, transparent, and secure financial system.
His arguments are both thought-provoking and compelling, offering a glimpse into a future where Bitcoin plays a central role in the global financial system. Whether this vision materializes remains to be seen, but his arguments raise essential questions about the future of money and finance that are well worth considering.
He acknowledges that not everyone is ready to embrace Bitcoin. Some remain skeptical due to its volatility, its decentralized nature, and its potential to disrupt existing power structures. He encourages those who are hesitant to approach Bitcoin with an open mind and learn more about it before dismissing it outright.
He believes that the more people understand Bitcoin, the more they will appreciate its potential to create a better financial future. He acknowledges that the transition to a Bitcoin standard won't happen overnight. It will be a gradual process driven by increasing adoption, technological advancements, and evolving regulations. He believes this transition is already underway, with more individuals, businesses, and institutions recognizing the benefits of Bitcoin and incorporating it into their financial strategies.
He encourages anyone interested in learning more about Bitcoin to do their own research. There are numerous resources available both online and offline, including books, articles, podcasts, and videos. He emphasizes the importance of critical thinking and encourages individuals to form their own opinions about Bitcoin.
He suggests that the best way to truly understand Bitcoin is to engage with the technology directly, experiment with wallets and transactions, and explore the underlying blockchain. While Saylor is undoubtedly a strong advocate for Bitcoin, he acknowledges that it is not a cure-all for the world's financial problems. He recognizes the legitimate concerns about its energy consumption, its potential for illicit use, and the challenges of scaling its network to accommodate global adoption.
However, he believes these challenges are surmountable and that the benefits of Bitcoin outweigh the risks. He argues that the potential for Bitcoin to create a more equitable, transparent, and secure financial system is a goal worth striving for.
He encourages individuals to be part of the conversation about the future of money and to consider the role that Bitcoin might play in shaping that future. His vision for a Bitcoin-powered future is both inspiring and challenging. It calls on us to reconsider our assumptions about money, finance, and the nature of value.
Whether you're a Bitcoin enthusiast, a skeptic, or simply curious about the future of finance, his perspective is worth considering. He challenges us to think differently about money, value, and the role of technology in our lives.
His insights provide a glimpse into a future where Bitcoin and other digital assets could play a central role. His arguments encourage us to be active participants in shaping that future, a future filled with both challenges and opportunities. His vision inspires us to embrace the possibilities and contribute to the creation of a more equitable and decentralized financial system. He sees it as a movement that's really challenging the way things are and could lead to a world where things are fairer and less centralized.
It really makes you think about what the future could hold, especially when technology empowers people and opens up more economic freedom.
It's a perspective worth considering even if you're not totally on board with all of his ideas.
He really wants people to get involved in shaping the future of finance.
He thinks it's important for everyone to look into Bitcoin and other digital assets and think about how they could contribute to a better world, economically speaking.
It doesn't matter if you're already into Bitcoin or skeptical or just curious about what's coming next in finance, Saylor makes some interesting points.
He definitely challenges the way we think about money, what it's worth, and how technology plays into it all.
His ideas about a future where Bitcoin and other digital assets are a big deal are really something.
He wants us to be a part of making that future happen.
It's a future with both challenges and opportunities, and his vision is pretty inspiring.
He wants us to go for it and help create a financial system that's fairer and less centralized.
For Saylor, Bitcoin is all about putting power back in the hands of individuals.
He really sees it as a path to a world that's more level and fair, where people have more say in their financial lives.
A future where you're not at the mercy of big institutions and the old ways of doing things, financially speaking.
It's all about financial sovereignty, giving individuals more freedom and control over what they own.
Of course, shifting to a system where Bitcoin is at the center won't be easy, and there will be pushback.
There are definitely going to be those who benefit from the way things are now and won't want to change. Plus, figuring out the regulations and dealing with things like energy use and scaling up the network are going to be big challenges.
But he doesn't think these challenges are impossible to overcome, and the potential benefits are huge.
He really wants people to be active in shaping what comes next in finance, talking about it, doing their own research, and looking into the possibilities of Bitcoin and other digital assets.
Until next time, goodbye.